signal to the market that in 2020, for the 2021 year, we're looking at a 50% payout. So we have our investors in mind. We're very grateful for your support. Yesterday, led by Dr. Diane Karacici, our strategic management team and board of directors of the BK Holding Group and of the BK Bank subsidiary met to have a very thorough and deep dive strategic presentation into the future of banking. As always at Bank of Kigali, we're committed not only to being the Rwandan market leader, but to being a trendsetter in Africa and in frontier markets around the world with the deployment of the latest, most effective customer service technology. It's all about having the platform to provide the best service and product to our customers. And lastly, I would like to congratulate Diane and Natalie for an extraordinary job, for their amazing leadership in the implementation of the full conversion of our core banking system. This would be the equivalent in airline terms of changing an engine on a plane in mid-flight. And they performed in an exemplary way. They did an amazing job. And it again signals the commitment of the Bank of Kigali Group to the most innovative and forward-thinking technology for the benefit of our customers and ultimately to bring costs down. So with that, I'm pleased to turn the program over to Dr. Karacici.
Thank you, Chairman, and thank you to all our media partners for being with us this morning. We are thrilled, as Mark is saying, to be announcing impressive results on the back of economic recovery in Rwanda. And this is, of course, enabled by a very good macroeconomic environment, vaccination rates that are probably the highest in the sub-Saharan region. So, and this is why we're also happy to be performing that way. So you'll see that our total operating income has increased by 22.5% year on year, which is, I believe, in these conditions, quite impressive. And our net income has increased by 33%. Across all our subsidiaries, we've seen this trend, growth in income. We also see some growth in operating expenses. But this is because, as Mark was saying, we're implementing a very comprehensive transformation of our core banking environment, our data architecture. And now we're proud to say that we are a bank that is ready for the future. And the retreat we were having yesterday and we're continuing today is showing us the trends of banking in the next 5 years. And we are pleased to say that we are ready to take on the opportunities that are presented to us in the future. So I'll let Natalie go through the details, but overall, very pleased with the results. And we look to a full year 2021 ahead of even our expectations when we started this year. Thank you.
Thank you very much, Diane, and good morning again, everyone. In terms of overall results, were very strong, as Diana just mentioned. Operating income very strong. All our subsidiaries have returned year-on-year growth that are strong, above 25% for most. All subsidiaries, including tech, are profitable. Our cost efficiency also remain among the best in the region. We have a much control in terms of our digitization strategy. We are focusing on cost management and efficiency. So when you look at our fees and commission, we saw very good volume, very good trade volumes on FX income and fees and commissions, and also subsidiary fees. So we are looking at mostly, when you look at the composition of our portfolio from BK Group perspective, the bank still represents around 92% of our profitability. However, fees are coming, also are growing quite fast to the range of 50% from our subsidiaries that are still small. On the balance sheet side, very good growth from loans. We are looking at a total asset growth year on year of 28.5%. When you compare with the banking sector, the figures that are yet to be published from our competitors suggest around 12% growth for the banking sector. Net loan represents around 60% of our total assets, again, largely toward large corporate finance, supported by government spending in infrastructure projects, but we see also opportunity in areas in the service sector and manufacturing that are expected to do quite well, given that the economy is reopening, the vaccination level that is quite high, as mentioned. On the liability side, very good growth on customer deposit. Our client balances and deposits grew by 20% almost year on year. We expect to see this growth translate all the way to end of Q4. So our projection for Q4 is to do around above 15%. That was our max target for when we started the year. We're expecting customer deposits to grow to the range of 10 to 15%. Now we are at 17.3 year to date. So we are very pleased with the support we are getting from the customers. The liquidity that we are currently holding is sufficient. However, we are also managing this quite well. When you look at the large project that we are financing, we are also increasing our deposit from financial institutions that are currently coming at attractive rates. And so we are seeing good pipelines on DFI finance. You also saw us recently sign a partnership with EIB that's supporting manufacturing and SME sectors in Rwanda. We are expecting to get a line of 40 million with them. In terms of key ratio, we are very pleased with our key ratio returning to pre-COVID levels. We have our ROE, which is a return to our return on average equity. Our shareholders' equity is currently at 18.2%. That's now above cost of risk and above 2019 level after 2019 when we raised the capital from our shareholders. So we are very happy to go back to the 14 to the 18% range. On our return on assets, we returned 3.4% annualized as of September. We expect this to be maintained strong by year end, looking at what we are projecting for Q4. Very pleasing with book value now above 300 francs per share. That's our book value per share. Market is still moving quite slow when you look at valuations. However, basic earning per share going at above 33% per year. We are sure that in the days to come, we expect to see some good pricing or response from the market, because our earning per share has increased to 54.2 francs per share from 42.6 last year. And that translates, as Mark mentioned earlier, 50% payout means we expect to pay double what we had paid for 2019. Our market share was maintained strong. We have grown total asset market share to 32% from 30.3% at the year end. On the net loans and advances, our market share has increased to 36.5%, how we are supporting the growth. So when you look at banking sector growth, it's still strong. On the net loan, compounded annual growth for the banking sector is at 14.1%. Our growth is at 20.7%. So doing much well in terms of returning, much better in terms of returning and growing our market share. On client deposit, very pleased with 31.2% market share from 29% at year end. And on the shareholders' equity, we are retaining close to 34% market share of the total banking sector. On the NIM, we also have maintained our NIM stable at 10.6%. Again, when you look at the competition here, we have around 200 basis points ahead. We are pleased to be able to retain that. Although when you look at the yield on loan, we are going toward 15.5 from 15.7 last year. We remain very prudent in terms of provisioning. Our coverage ratio, so that's our total provision on NPLs, has now increased to 118%. We are pleased to see the development in the economy. So we are thinking asset quality has improved. However, there's still uncertainties when you look at the growth that is expected to come. This year, GDP is projected at 5%. So we are still holding a few clients at adverse macro overlay in terms of probability of default. So we are holding some excess provision that maybe in 2022 you will see as release. But our asset quality is generally improving. NPL ratios are currently at 6.2 from the 6.7% range we had last year. As mentioned earlier, that our efficiency is improving. Cost to income ratio is coming down from 42% in 2019 to around 35% that we expect to also maintain below 40% for the next few periods. I've mentioned that all our subsidiaries are doing very well. We have details, maybe that will come in questioning time. In terms of forecast for Q4, we expect to see a similar performance in terms of Q3. Around 14 billion net income was recorded for Q3, including a one-off adjustment for adverse macro overlay release that we did for our impairment provision. We expect to come in close to the second quarter's result when you're looking at Q4 forecast. However, top line, we maintain Q3 total income projections. OPEX also expected to come in line with Q2 range. And for provisioning, we don't expect any big surprises. So we will see some pressure being released on the cost of risk side. Our taxation, there's nothing that has changed in the quarter, or that's what's expected. We expect to have an effective tax rate of about 32%. And on the balance sheet, no big disbursement is expected for Q4. So our loans at year end will be maintained strong at around 15 to 20% year-on-year growth. And on the client deposit, I'd mentioned earlier that we are very pleased to have exceeded our target, and we will maintain this good relationship with our client and retain most of this liability. One good news that you would expect in Q4 will be the payment of 2019 dividends that we expect to make in the next couple of days. And that currently we are holding about 31 billion of dividends payable, of which 13 represent what will be paid in the next couple of days. And we are very pleased to be able to release this liquidity to our shareholders. I will pause here for any Q&A, please. Thank you.
Thank you very much, Kelly. Some questions. Feel free to unmute and ask your question, but you can also use the chat to send your questions. You're welcome.
Hello, good morning.
Good morning.
My name is Collins Moy. A small clarification. What did you say your projections for Q4 were? Thank you.
We are projecting a net income of close to 12 billion for Q4. That when you look at our results for Q2, Colin, we have 14 billion. That included an adjustment of the provision that we expected as a one-off. Thank you.
Good morning. My name is Juma. First, I would like to congratulate you for the good numbers. Those are good figures. But in your presentation, I haven't had what interests us the most, your plans for the Kenyan market. Are you people planning? When are you planning to, or do you have any plans to roll out full banking services in Nairobi, or you're just going to stick with the NSE? Thank you.
So thank you for that question. Let me take a try at that and then turn it over to Diane. At this time, our commercial banking activities are focused on the Rwandan market. Only 8% of Rwandans have had access to bank loans. More than 3/4 of Rwandans don't even have bank accounts. So we have a great market ahead of us here and a lot of work to do in our own market. In our strategy session yesterday, and it's much too premature to comment in any detail, but we considered a number of other products that we might be able to offer to the Kenyan market and to other regional markets in Africa through our BK Capital Group, investment banking services, advisory. We were very pleased and honored to be the lead manager along with Renaissance Capital of MTN Rwanda's recent listing. We have a lot of experience in this area. We have a great team, terrific leadership. And there are other areas we're exploring too, such as possible presence in the emerging carbon trading markets. We have a lot of things to explore. There are a lot of services and products and support that we believe that we can offer to the region, but not our traditional core banking services, except to be able to support Kenyan businesses coming into Rwanda. We're the best and first stop for that.
Rwandans have access to bank loans, as he said, 8%. Insurance penetration is 0.6%. So we have a lot of opportunities ahead of us in Rwanda. And we believe we can take some specialized services to the region, but it's something that we're discussing right now in our strategy retreat. And we'll be able to have more information about that later.
We have a question in the chat, actually 2 questions in the chat from Elisha Kamal. The first question is asking, what are the lessons learned from the cross-listing on the Nairobi Stock Exchange and the London Stock Exchange?
On the Nairobi Exchange, it's been a very positive experience for us. First of all, it gives investors, institutions, individuals in the Kenyan market an opportunity to directly access the Rwandan capital markets. From the point of view of our international investors, Nairobi offers international world-class custodial support, which is not yet available elsewhere in the region. So this is an important supporting factor. A lot of our investors are very pleased to be investing through the Nairobi line, and it's been a very successful endeavor for us.
At echo what Mark says, it's been a very good experience. We've seen a lot of engagement from shareholders on the Nairobi line because of the availability of custodial services. And we hope that with improved performance post-COVID, we'll be able to attract even more investors through our Nairobi line.
The second question from Elisha says, with the core banking system going live, what is the future digital plans?
Indeed, this was a very critical foundation for us to establish. So all our digital ambitions can have the right infrastructure. So looking ahead, and this is already in the pipeline, we are redesigning a number of our channels and apps that we believe is going to be world-class. We are working on a new internet banking platform, mainly for corporate, allowing them to manage all their funds directly online. We're also looking at integrations for our corporate clients with their ERP system, so they're able to make payments, international payments, etc., directly through our systems. So we have a lot of ambitions. We have a new data platform, we call it Data Lake, that is like a hub for all the data we have on our clients. You're able to see a 360 view of every client and able now to start working on a number of analytics journeys that we believe have a lot of potential because we're able to open personalized services to our clients. We're able to also see some trends and be proactive in terms of offering the right products to our customers. So we have a number of exciting journeys that we are working on because we have now the right foundations.
Thank you. We can take more questions from the audience.
If no more questions, thank you.
I do have a question, please. If you don't mind me asking again, my name is Collins Moy from the New Times. A small clarification. Speaking of data, the Rwandan government in October passed the Rwandan cabinet in October 15th approved the data protection and privacy law, the personal data and protection privacy law. What are likely to, what do you, I mean, as one of the largest holders of personal data, given your market reach and market coverage, what do you think could be the implications on BK business in the future, or how is that likely to affect your operations?
As you know, in Rwanda, a law is always discussed amongst stakeholders and the banks, not only Bank of Kigali, but all banks are important stakeholders in this area. And we are all consulted. And what we did as Bank of Kigali was to make sure all our recent implementations well aligned with the spirit of the law to protect personal and identification data for our clients. So what we can tell you is that although we were given 24 months to being compliant fully with the law, we have started a journey and all our recent implementations are already fully compliant. And the impact on us is that we've now hired a team that will be in charge of, working on the data, signals, and complying and informing the regulators and any stakeholders in case of breach. So this is the only impact on us, because now we have a team that is dedicated to data and making sure that all our data, our customer data is well protected.
Thank you. If there is no more questions, I would like to invite the chairman to offer his closing remarks.
Thank you all. Good morning to you, Collins,
and thank you all from Nairobi for joining us. We appreciate it, and we look forward to keeping everyone closely in touch.